do you got for us? Tell us. Tell
Let's
us the good stuff, the highlights.
I'm excited. Let's get into it. So first off, we'll do just a little overview on the market. Just the security token market in general. As we said, we've got 9 live tokens now. And when we opened 2019, the market cap was 229 million US dollars. And at this time, it was actually one token. It was the T0 token, which was sold on primary in the primary offering for about $10 a share. So we're at 170 right now, which is great, and it's trending upwards. But as you can see, it hasn't been the best 12 months for T0's absolute token, but in absolute value. But the last market cap, the most recent market cap that we have as of recording is around 76 million, as I mentioned already. So the change in 2019 was minus 67%, which isn't great. But again, I think that we may be in a much more stable and healthier market at this point. Certainly now it's diversified across 9 tokens instead of just one asset setting the entire market cap. And so that I think that, again, the positive trends are really good to look at. In terms of total volume, we've got about $2.5 million US dollars in total security token traded volume across the year and across all security tokens. That includes all 9 throughout, all the way up until January 19th was the day that I decided to cut off the report. So that leaves us with a monthly average volume of around 215,000 US dollars in trading across those tokens, and finally a daily average volume of about $7,000 in trading volume for tokens across all of the different tokens. But again, I will say that just like with the market cap being highly dominated by T0, even to date with it being 44 of the 76 million, it also significantly dominates the trading volume. T0 probably averages, I would say, 3,000 to 5,000, if not more, on a daily basis. So it is probably doing just, I would say, maybe even more proportional volume than it is in market cap to these securities. So T0 is still the dominant player, but we are seeing some very interesting assets that are going live as well on other exchanges. But I want to take the time. I spent the report really detailing every asset. I wanted to talk about the overview, its origins, as well as the underlying asset, what that actually means, like what are you actually investing in when we're talking about these things, as well as its secondary performance. But I'm just going to highlight a few of them for the podcast. I've got 3 that I wanted to look at specifically that stuck out to me this year, for better or for worse in some cases. So the largest token by market cap on Open Finance, and I think the earliest issued token in the industry, is Blockchain Capital, which issued its BCAP token that represents indirect economic interest in the limited partner ownership of 10 million of their $50 million focused blockchain fund. So they launched a fund. They first launched their first fund, I think, in 2013, and launched their third fund in 2017, which they tokenized 10 million of their $50 million portfolio. And it represents indirect limited partner ownership. And so what that means is that due to some early legal question marks when they were actually first tokenizing the fund, it only provides the indirect economic interest. And that essentially means that when a portfolio company that they own exits, Blockchain Capital itself receives the full return and then will buy back the corresponding dollar value of the outstanding tokens on the secondary market, and then will burn them, removing those tokens permanently from the outstanding supply. So this in turn would increase the price, therefore in theory providing their investors with the capital gains. So this is not completely intuitive, right? When you're thinking about something that would be the most intuitive, it would be something like a SPICE VC, which is a direct economic LP interest, and that essentially means when they get an exit, it's paid to dividends to the token holders, and they just get the return right there. Unfortunately, from what my research, it seemed like it wasn't very clear whether maybe the technology wasn't there to do dividends yet. Maybe there were some legal questions, it seemed like, potentially around what they could and couldn't do. So they came up with this model of when they get an exit, they've got a fat stack of cash, and then they'll use that cash in a proportional amount to how much the token holders have. I guess it would be 20%, and take 20% of that, buy tokens, and then burn them. And burning, again, just means removing them permanently from the supply. So supply and demand would then increase. And so Blockchain Capital, the thing I really like about Blockchain Capital is actually how successful they've been in their investments. And so if you know about investing, part of the difficulty is actually getting in on really successful rounds. And so what we've seen with Blockchain Capital's investments so far, they've got 4 unicorns in their portfolio, which are companies over $1 billion, with Kraken, Coinbase, Circle, and Ripple. Other leading security token companies are also in their portfolio, like Securitize and Harbor. And we've seen the portfolio is up 230% since its launch in 2017, which is a great start. And the token is up 51% in 2019 alone since hitting secondary market. So the token is up. Things seem to be going very well for everyone. And blockchain capital, I think, is a fantastic model for capital raise and deployment. And while I know that investors would probably prefer the direct economic interest in the fund, I can't really blame BCAP for that because I know that there was some uncertainty and certainly things are much clearer now than they were in 2017. But in any case, they have cultivated a very strong investment portfolio and their token is following suit. So it does seem like the structure is working just as intended.
Yeah, it does definitely. I think good analysis on BCAP there, Kyle. I think most people don't recognize that it does have a bit of a unique structure, so I think they appreciate the illustration there. And yeah, I mean, they do have a great portfolio. So the fact is, if you wanted to, you could go to Open Finance today and go buy yourself some BCAP. That's pretty cool.
Yeah, you could. It's a revolutionary product to be able to provide that for investors. You can buy in now as you've seen them invest in their tokens, and now you're like, okay, I think these are great companies. Now I want to buy in. Versus if you wanted to sell now, if you were an investor that said, okay, look, I think that the portfolio is up 230. I don't want to wait for another bunch of years for this company to exit. I'm just going to take my 51% profit in 2019 and be happy with it. Either way, I can totally understand.
And I think you mentioned in more detail in your actual report as well that they do release a quarterly NAV and such as well. So there's some good investor reporting practices.
They give great breakdowns.
Well.
I think of all of the funds, I think that blockchain capital gives the most transparent view into what not only what they own, but they actually give the dollar value of the equity value of the companies that they own, which I think is fantastic and something that we haven't seen from any other token yet. So
definitely a great case study of 2019. Very cool, Kyle.
Absolutely. And now we're going to take a different turn. We're going to stick with Open Finance, the exchange, but we're going to talk about a revenue share token listed, which is Lottery.com's LDCC token. And so as I was doing my research, the Lottery.com token kind of left me scratching my head a little bit, because they raised money in their initial offering based off the launch of a new raffle that they were calling the Global Impact Raffle. And token investors that wanted to participate were entitled with 7% of the net revenue of that raffle. However, 2 years later, the raffle still has not launched, and I haven't been able to find any news that has come out since 2018. So I haven't seen any updates on this raffle, on the progress. It doesn't seem like there's a whole lot of focus on it at all. And so as an investor, a couple of years later, that would be something that's slightly concerning. Definitely do your own research before investing in any of these tokens. To anyone listening, none of this is financial advice in any means. Do your own research for sure. But after diving into the price data, doing my own research, I also saw some fishy transaction data with the token as well. Across this 2-month period, the trading occurred over 9 separate days. And in this span, there were over 40,000 LDCC tokens that were sold between 10 and 30 cents, while there were 153 tokens that were bought between 67 and 87 cents. So I'm going to say that again, 40,000 were sold at 10 to 30. And there were 153 bought between 67 and 87, and there was nothing in between.
Less than 1%. Well,
yes,
less than 1%.
Much less than 1% were bought, but at a significantly higher multiple. And so I could see that sellers were selling thousands of tokens per day, or per transaction rather, at a huge discount. But then immediately following these really large sell-offs, there would be one token purchased at a tremendous premium. And it literally occurred 8 or 9 transactions in a row between October 25th to December 24th. There were, I think, 9 transactions of thousands of sold LDCC tokens at 10 to 15 cents, and then one purchased at 87 or one purchased at 67 following this huge sell-off. And it's a pretty misleading tactic. I don't know exactly what happened there. I'm certainly not accusing anybody of anything, but at the very least, it's concerning for the liquidity of the token. Just because there's no indication of the promised raffle. And it also seems like there's very shaky market support. It doesn't seem like there's many people buying the token at all. And it also seems like there's a lot of people selling the token. And then there's these kind of weird premium buys that are happening. And again, I'm not calling it, not necessarily saying anything, about that, but it's very peculiar, I think, for sure, to see that. It doesn't seem like that's a natural market consequence. But again, make your own conclusions, do your own research. But I think one thing's for sure, the team at lottery.com really does need to address token holders to explain their objectives and their plan for 2020, because at the very least, like what's the deal with the raffle? Like if you bought in, there's nothing. There's no indication that this is moving forward. So that's definitely one to look out for.
Yeah, it's tough to explain that one, Kyle. I don't know much to say there other than, this could be investors, this could be market, this could be the issuer. We have no idea. Definitely hope to not see that kind of things happen, but I'd love to figure out why that's actually happening, just to get a little bit more context and understand why this could be happening.
Yeah, I'd be happy to dive into the full transactional data and really look into it more and clarify. But again, we can only go with the data that me and my team have been able to find, and without being able to provide us with the information to be sure, this is what we have. So this is what we're going to go with. So.
Okay, so we got a great token and maybe not such a great token there in terms of examples. What else you got?
Well, the last one that I'd like to explore is the 3 newest tokens to hit secondary markets. And these are 3 tokens that from an issuance platform that we certainly have talked about quite a bit over the last couple of months. And that's the 3 realty properties. And so 2 of them are single family homes and one is a 15-unit apartment complex. And all 3 are based in Detroit, Michigan. And it's very interesting. What they did is that this company owns the full equity value of these homes. They did some renovations to the properties, spiffed them up all nice and good. And then what they did is they tokenized their LLC that owned each property. So they have a property, they own it with an LLC, an individual LLC that owns that property. And then that LLC is then tokenized into 750, 1,000, or 3,800 shares, depending on the property. But that LLC is divided into some shares, and then those shares are sold fully to investors. So of the 750 shares, they're all sold out on a specific property. And the interesting thing with how this functions is that the token represents equity ownership in the property. Obviously, you own a piece of the LLC that owns the house. So you own a piece of the house, you own land, and as that increases in value, the equity value of your home would increase. But on top of that, they actually pay a daily dividend of the rental income of whoever is renting the property. So they have a third-party property manager that actually rents out the home to a family or multiple families in some cases. And then that rental income is then translated back to investors on top of the equity value of the token, paid daily. Every morning you wake up and see your rental income is in the bank account. And so all 3 properties actually provide double-digit dividend returns on an annualized basis. So you're getting double digits in dividends and you're getting the exposure to the equity value. And the fact that these tokens or these properties provide these investors or token holders with the equity value in addition to the double-digit dividends each year, I think is really fantastic, because it's great to see issuers creating really fantastic instruments and that they're not just looking to screw over investors, like what we saw in the crypto scene a lot, right? Of, buy this token because it's going to do X, Y, and Z, and then it falls through in a lot of cases. And so it's cool to see a real asset that's been very successful. They sold out a few of their properties. They've been very successful in the secondary markets, even though they haven't been liquid for very long now. And I think this is, again, another fantastic use case. Real estate is a huge, huge industry. And this is a very repeatable model for any homeowner, any multi-property owner who wants to do something like this could absolutely do it the exact same way that Realty does. And I think that the malleability and the opportunity for anyone to follow a similar structure and provide this for their investors, I think is great. So I'm excited about those ones too.
Love this model, Kyle. It's the simplest, easiest way for an investor to access the real estate asset class while at the same time getting many technology benefits from using cryptocurrency, from using blockchain, and from using security tokens throughout this process. So super, super cool. I love this model. In fact, it's also, as I understand it, partnered with a decentralized exchange to help create liquidity for these tokens as well. So again, a very cool model to discuss as well. Thanks for sharing, Kyle.
Absolutely, man. But I think that's about it from me. If you do want to read the detailed report, I go into much more about these 3 tokens, or these I guess 5 tokens, as well as the other live ones that include Spice VC, Batch 22X, Protos Asset Management, as well as T0. So if you want to check out any of that, definitely go check out my report in the description, or I'm loud on socials. So if you find me on Twitter or LinkedIn or Facebook, it's all there. So check it out anywhere you want, and that's about it for me.
Give us your feedback, share with us, engage with us. Check it all out on stomarket.com, and hopefully we'll catch you next time.
Thanks so much for listening. Talk to you next week.